Michelle, given the spending patterns that we've seen in China, what are you expecting to outperform during this holiday season?
Yeah, definitely. If we look at the data across the board, tourist data is quite encouraging. Looking at the visitation numbers, it's growing by 70% year on year, and it's back to the 120% higher than pre-COVID level. And also something more encouraging is for the tourism revenue, for the very first time past the pandemic impact, it's back to the 2019's level. And on the flip side, we also see the overall retail sales are decent, having a 19% year-on-year growth. We believe this is on track of the overall recovery trend.
When we talk about Chinese consumers, we know their love for luxury goods. Are we seeing that pop higher after the pandemic?
Yeah, so I think overall, we indeed see these polarization trends in the Chinese consumption market. So top-end consumers, the spending power is relatively resilient. So the spending has been pretty solid. And the debate right now is whether they are spending at home or they are spending abroad. But our view is that we are seeing both the domestic and also the overall Chinese cohort spending globally will see a decent recovery trend this year. So our team is looking for like domestic market luxury can spend increase by 15%, and globally we are still seeing a solid 25% growth this year.
It's that external, the outbound spending component that's been a little bit softer, right? And you saw that reaction in stocks like Estee Lauder, for example. When do you expect to see a fuller recovery when it comes to outbound spending? Or do you think the spending patterns will remain a little bit different post-reopening?
Yeah. So on the one side, if we look at the outbound travel, so far during the holidays, around 40% of pre-COVID level in terms of the international flights. And but looking at the visitation to Hong Kong to Macau, it's back to 60 to 70% of the pre-COVID level. So I think the path is still there, and with increasing flight and also more visa being granted, I think the trend will be gradually picking up. So as a result, by end of the year, our team is actually looking for the outbound travel visitation number could go back to almost 100%, like 90, 100% of the pre-COVID level. And on the other side, I think spending power is true. I think there's always a lot of debates on the spending power improvement, but at least we are seeing that the overall traffic activity is improving, and with better traffic activity improving, we think the spending power will gradually catch up.
The problem with this sort of post-reopening rebound is that it can be temporary, right? The revenge spending, the reunion dressing type consumer trends tend to fade. Do you see this as being a self-sustaining cycle when it comes to the consumer, particularly at a time when we see the property sector, such a big source of household wealth, still not really recovering very strongly?
Yeah, indeed. I think past 3 years we see during the holidays and when there were promotion activities like June 18, like Double 11, consumers' appetite for spending is pretty strong, and usually the holiday performance are much better than the off-peak season's performance. But having said that, if you look at first quarter results, even Chinese New Year improvement is pretty encouraging, and after Chinese New Year is slow down. But the overall aggregate first quarter's performance, we think, is on track of our earlier expectation. So on the one side, we do see like pent-up demand will drive the significant boost during the holiday. But all in all, I think from the sequential trend perspective, we still believe on the quarter-over-quarter perspective, we are seeing gradual improvement throughout the whole year if employment market continues to improve and wage inflation starting to be more stabilized.